Hey everyone, Jeff Dorman, Chief Investment Officer of ARCA, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the crypto markets. I'm joined by Thomas Yeagers, who is the CFO and COO of Relai, who is also the author of an awesome book, Understanding Crypto Fundamentals, which those of you who have been listening to me for years or reading what I've been writing for years, we care a lot about crypto fundamentals at ARCA. So it's nice to have a new voice joining us. And also, for those who know us, we often don't talk that much about Bitcoin because we talk about the other sectors and the other areas of crypto. Thomas, much more focused on Bitcoin. We thought we'd give him a voice and give him an audience as well so we can hear the counter point of Bitcoin fundamentals. So Thomas, thank you for joining us.
Well, thank you very much for having me.
So first and foremost, for those who've been reading our blogs, and obviously, for those who want to read the blog this week, we're not going to talk about it too much, but we talked a little bit about Ethereum and what's driving the markets right now. We talked a little bit about internet capital markets, the idea that you can use blockchains and tokens to basically fund new businesses and to ultimately replace debt and equity in the capital structure. Great write-up by my partner, Topher McPherson. So I would encourage people to check that out. But also over the last couple of weeks, we've been talking about just valuations in general, right? Talking about things like how do we actually look at outstanding supply and adjusted market cap and what the right way to look at tokens is. We also talked about layer one protocols and how if you do a sum of the parts analysis, they kind of make no sense when you look at do you value Ethereum on cash flows, or do you value it based on the utility or demand sync, or do you value it just purely on hype and social? But we haven't talked a lot about Bitcoin fundamentals. Thomas, why don't you first and foremost let us know what drove you to Bitcoin and to writing that book?
Yeah, sure. So I'm coming from a traditional financial background, so financial risk management in banking. And with this background, I was originally rather skeptical of crypto assets. Obviously, over the years, I could not continue ignoring that a lot of people were seeing real value in this. So I decided to be open-minded and dive as deep as possible on the topic. And I quickly realized that actually there was really something to it. So the whole concept of decentralization, of having assets that are apolitical, that cannot be influenced by one central bank, by one party, by just specific companies, but really an asset that is genuinely neutral. So I started to realize that actually made a lot of sense. That's how I fell into the Austrian economics rabbit hole and started looking at the whole space, trying to apply my background in financial risk management and valuation methods, so generally in portfolio management, into this relatively new crypto asset space.
So
after a couple of years of...
I was gonna say, would you consider yourself today still a Bitcoin maximalist, or has knowing that you've been in this space for a long time, as most of us have, some really still just care about Bitcoin, others have evolved into looking at other areas? Where do you fall on that spectrum?
So I think I did evolve, but the other direction. So I started by being interested into all crypto assets, looking into this, and then based on what I try to call, let's say, base principles, so first principles, naturally emerged as a Bitcoin maximalist at the end, understanding that the real value is in Bitcoin, not in other crypto assets. And I'm happy to talk more about this.
Now, is that because you don't believe the other use cases of smart contracts on other blockchains actually make any sense? Or is it because you believe that ultimately anything that can be done on a blockchain can be done on the Bitcoin blockchain?
No, I think we need to take a step back. So why does the blockchain technology itself have value? Blockchain was made to create decentralization. If you don't have decentralization, then there's no point in using a blockchain, because a blockchain is nothing else than a database, and it's actually a rather inefficient database in the grand scheme of things. You can find centralized databases that are faster, cheaper, more efficient than a blockchain. So really the only point of using a blockchain is if you want to achieve decentralization. Now, the question then becomes, what asset has indeed achieved this decentralization? And there we're going, one step deeper. What does it mean, decentralization? Well, you have decentralization of funds, how funds are spread equally or centralized among few hands on the network. Sorry. And then you have political decentralization. So do you have few actors that have a large influence on the protocol, or on the contrary, like even a group of actors that are relatively influential that cannot possibly affect how the protocol evolves? And in that regard, Bitcoin really emerged as, so far in my opinion, the only asset that has proved that even when you have a few influential people that are trying to make changes to the protocol, well, they could not make that happen. We have seen that, for example, in the block size war in 2017, 2018, when you had big blockers that were trying to extend the size of a block on the Bitcoin blockchain. They did not manage to make that happen, just proving, in other words, the resiliency of the Bitcoin protocol. And let me contrast that with... Mhm.
Can I jump in for a second? Because I just have a question here. So what's funny, everyone has a different definition of like why blockchain exists and why it's useful. The one that I've gravitated towards over the last 8 years is that the point of a blockchain is to move assets. And therefore, the point of the Bitcoin blockchain is roughly to move Bitcoin, the asset, whereas you have other blockchains that have now figured out other assets to move, whether that is equity-like tokens of quasi-equity tokens of businesses, or now RWAs like effectively treasuries via stable coins, or one day maybe stocks, bonds, and real estate. So that's I don't disagree with anything you're saying with regard to why Bitcoin is special and why Bitcoin is the only blockchain that can truly reach decentralization. But I think the point you're making of the only point of a blockchain is to be decentralized, that's where I get stuck, because I think of the only point of a blockchain is to move assets. And thus far, there are more assets capable of moving on other blockchains than Bitcoin.
Well, yes, you can move assets, but you could move assets digitally on any centralized database before that. If you want to have intermediaries that move assets for you, you can have that. Now, if you take even a pseudo decentralized blockchain like Ethereum, where you had, what is it, a dozen different protocol changes over the last few years, where you had rollbacks of the chain when the leader Vitalik decided that he wasn't happy with a hack that happened. That's just proof that it's not decentralized. And if it's not decentralized, well, effectively, you are using an intermediary. The blockchain is just a tool that is provided by a company, by an institution. And if you are going to use a tool that is provided by a company or by an institution, then there is really no big point of using a blockchain, because again, this is an inefficient way of doing it. My point is really, it's only if you can manage to move the assets without an intermediary that the blockchain is valuable.
Okay. So going back to that, then, when you wrote your book, and forgive me, I don't remember when you wrote the book, but I know, again, for anyone who wants to read it, it's called Understanding Crypto Fundamentals. In addition to kind of explaining what you're going into, talking about why blockchain technology and what's so interesting about it, you go into a valuation method of crypto and Bitcoin specifically. This is where I've always gotten stuck, and forgive me, I'm an ex Wall Street TradFi guy. I've always kind of looked towards traditional fundamentals when I try to come up with at least a base for valuing assets, and I've gone in a lot of different directions over the years. Meaning, like, I've looked at Bitcoin almost as like credit default swaps on government debt. Like, what would you pay for the right to have some sort of a valuable asset if the current currency and banks and monetary system kind of implodes? I've looked at layer one protocols, like I said, as sort of a sum of the part analysis of it's part fee-based cash flows, it's part demand-based utility sync, and it's part kind of social hype. I've looked at, quasi-equity like crypto assets, kind of like I would look at stocks. Like I would look at Hyperliquid the same way I would look at a stock, which is just, what is the revenues that they're producing as a business and how much of that is being poured back into the token via buybacks. when you look at Bitcoin, what do you think is the best? First of all, do you have a singular method for valuing Bitcoin, or do you think there's multiple ways to value it? Where did you come out in that process?
Yep. Before talking about the valuation method itself, I think it's worth taking a step back and understanding what is the asset useful for. If you are used to value companies, and therefore you're always used to using a DCF, so discounting cash flows, well, according to that approach, you will say land has no value because there is no cash flow. Gold has no value because there is no cash flow. Bitcoin has no value because there is no cash flow. But it's just an inappropriate method for that particular asset. Land or gold or Bitcoin are not valuable because there are cash flows. They are valuable because they are scarce asset that is desirable. And this is therefore a completely different approach. So the market that Bitcoin is in is the market of store of value, the market for scarce desirable assets. And the same way you would value gold as a store of value, you can value Bitcoin as a store of value. And there you have other valuation methods that come up. One of which is, just looking at the total store of value market. You have, what is it, $20 trillion stored in gold, about 200 trillion stored in stocks, 200 trillion stored in bonds, about twice as much stored in real estate. Well, all of these are ways for people to store the value of their work towards, in order to give it to the next generation. And this is the market that Bitcoin comes after. So now at a market cap of about $2 trillion, Bitcoin has still a very, very long way to go in order to reach maturity, in order to take its decent share of that store of value market. It will take a share of gold store of value, it will take a share of real estate store of value, and so on, even fine arts and wine and whatever way people choose to store value. And this is really the way I look at it. So this is the best valuation method that I understand for Bitcoin. It is basically looking at comparables. So what are other assets that are stores of value, and what role is Bitcoin playing in this broader field, and will it play in the future? I believe that Bitcoin will take a place that is largely superior to that of gold in the global store of value market, maybe 10x as much, 100x as much, something around these lines. And therefore, the upside potential for Bitcoin is, in my opinion, massive, so absolutely massive, and massively superior to that of any other digital asset.
So I'm with you in that, I think, even though I led with saying that I tend to look at everything from a pure kind of cash flow fundamental lens, I'm also, have always evolved my methodologies and tried to, use different methodologies for different assets, because I agree with you, right? There's no reason to try to value Bitcoin the same way that you would try to value, something like Hyperliquid, and there's no reason to value either of those the same way you would value something like, copper or housing, right? So like there is different ways to value different assets, and you have to be flexible in that belief. But I think the question that I just keep coming back to then is like, if I were comparing Bitcoin to gold, that makes sense, right? I think relative value, they're both assets that maybe aren't used a whole lot, but they are certainly stores of value and certainly flights to quality. I would consider gold more of a market flight to quality. I would consider Bitcoin more of a flight to quality against corruption of banks and governments. Meaning, and that's something I've written about frequently, is that Bitcoin tends to do the best whenever some area of the world loses faith in their banks or governments. But I find land to be a less useful comp to Bitcoin and gold, because to me, part of the value of land is not just that it's scarce and that it is a store of value. It's that you can build on land. You can do things on it. So do you believe that Bitcoin at some point, there's really going to be a lot built on Bitcoin? Or do you believe it'll be more of a simple store of value like gold?
So land is on for two reasons. So you are flagging one of the reasons. So you can build on land the same way you can, use your real estate to live in it. But this is not the entire value of the land or real estate total market cap. There is a large valuation, so a large part of the valuation of these markets that are due purely to their store value value proposition. The same way gold, you can say, oh, gold is valuable because it shines. Well, yes, you can wear gold as a necklace or as earrings, but most of the gold is not in jewelry. Most of the gold are buried in the ground or in vaults. So it's not because it shines that it's valuable. Most of it is used as a store of value. And Bitcoin is obviously not going for the first use case of, you cannot build on it, you cannot live in it, you cannot wear it. However, it goes for the second part of the equation, the part of store of value. And for that part, it is largely superior to any of the examples that we have used before. It is more liquid than be it gold or real estate or land. It can be sent from New York to Tokyo within minutes on a Sunday afternoon. It can be divided at no cost up to 8 decimal points if you are staying on layer 1, and more than 8 decimal points if you are going on layer 2s. And and so on and so forth. It's more durable. You don't need to repair the roof. You have no leaks, contrary to real estate. You take any category, any criteria that gives value to some of these store of values, traditional stores of value, and Bitcoin is improving on them. The only thing where Bitcoin is not yet at the same level is in terms of history. Gold has 5,000 years of history. It has some cultural anchorage. In China or India, gold has a very important cultural role that obviously Bitcoin does not have. But this is really the only point. Up to a few years ago, I could have said, well, Bitcoin is still living in regulatory uncertainty, but I think we're getting outside of this as well. So nowadays, with what's happening, we have very clear certainty. You can hold your Bitcoin in most places. You can, you won't be taxed to hell for having Bitcoin or for selling Bitcoin. You have this regulatory certainty. So even that argument falls apart. So these reasons make me say that Bitcoin is more valuable than these alternative sources of value.
So when I think about blockchain, I've never been a maximalist on anything. I would consider myself a profit maximalist more so than a technology or blockchain maximalist. But at the same time, I also am just intellectually curious about this space, and that's what drew me to it, a decade ago. And when you look at someone like me who it can kind of move seamlessly back and forth between, I like Bitcoin for one reason, I like layer 1 protocols for a different reason, but not really as an investment. I like, app chains for a different reason because I think they're easier to value and they have some real cash flows and some real benefits. Do you think I'm crazy, or people like me are crazy? Like that this is just, we are just going down a rabbit hole that will be dead in 20 years? Or do you think there's nuance to it, but you just like Bitcoin better?
I don't think you are crazy, but I think that having this discussion might be missing the forest for the tree. I think, yes, you can have some value out of a Ethereum, Solana, or whichever is your favorite altcoin L1, but this is something that can maybe 10x if you have some use cases that really come up for that, and if they go towards more decentralization over time, which is far from certain that they will go that way. But Bitcoin has, massively more potential. First of all, it's much bigger, and yet I believe it is 10x more, 100x more than any of these alternative protocols. So I'm not saying they have no value. I'm saying that it is negligible compared to the monetary revolution that we are living here with Bitcoin.
Yeah, I don't disagree with that. I think, I've always said that I think Bitcoin is less risky today as an investment at 120,000 than it was at 10,000, even though obviously the return potential is different. Bitcoin was very experimental. Bitcoin was even people like myself who bought it 10 years ago, and you, I'm sure, owned it for a decade. Like, Yeah, there's varying levels of real confidence when we owned it in terms of, is it really going to survive? Is it really going to grow? Some people were, steadfast and put 100% of their life savings into it and just believed in nothing but. Others were a little more skeptical. But I've always been impressed and somewhat surprised at how well Bitcoin has done. But I think it's less risky today than it ever was because of everything that you just mentioned, as well as just there's no putting the genie back in the bottle at this point. Like, this is a global asset that is, now a top 10 asset by market cap. Um, and I think you're absolutely right that there's probably no single asset on a blockchain that will ever be as big as Bitcoin. But I do think there are areas of crypto technology that could be bigger. Meaning, again, if I'm right, or even partially right, when I say that the point of a blockchain is to move assets, 99% of the world's assets aren't even on chain yet, right? The bulk of the world's assets are stocks, bonds, and real estate. That's about 99% of the world's assets, right? We're talking $600 trillion in assets are basically represented in stocks, bonds, and real estate. If those ever make their way on chain, and ultimately, who cares which blockchain it ends up on? Maybe it's a lot of them, maybe it's one, but ultimately, that's a bigger market now than Bitcoin by itself, most likely, which is that you're going to have some ecosystem. you know, this is a crude analogy, but if you think of a smart contract platform, kind of like an app store, like the Apple App Store on day one was all just speculative, but now it's a huge ecosystem because there's so many applications on top, built on top of iOS. And you can say the same thing about Android. Um, that's kind of what I think of a blockchain. Like, basically the last 10 years of smart contract technology, smart contract platforms has been basically just a test, like a test of does the technology work, but it's meaningless when you're just trading meme coins and NFTs and other random assets on there. The true test is going to be when the $600 trillion of bonds, stocks, and real estate come on chain. And then I think you have to, it's different, it's separate than Bitcoin, but it's a much bigger, massive opportunity than what Bitcoin is today based on the limited use cases of Bitcoin beyond just store value. Would you agree with that?
Well, again, I think it depends what you mean with they are moving on chain. The technology can move to an Ethereum-like system, and indeed you can move smart contracts, which is an interesting innovation, yes. But I don't hold stocks because I believe in the company behind it so strongly that I want to support their financing. I hold stocks because I want to convey the value of my work today to future value in 10 years when I will want to buy a house with it. I'm holding these stocks because I want to convey value over time. And I believe that most of the assets that you mentioned, bond stocks and so on, they will go on chain as a store of value. And there is no better store of value than Bitcoin because it's the most decentralized, it's the most secure, it's the most, just name it. It has all the characteristics to be the go-to place for storing wealth over time. So yes, there will be massive moves. Yes, there will be a move towards on-chain assets. I'm just not sure that it is because you move another trillion of assets on chain on the altcoin L1 that the token of that protocol will gain in value by so much.
Yeah, and
This is
yeah,
not
I
a
agree.
direct relation.
Yeah, I actually think, personally, I think layer one protocols are probably terrible investments for that reason. I think they're useful, but so is aluminum, and aluminum's not very valuable; it's just useful. And I think you're right. Like, the growth of the on-chain economy may not directly benefit the price of a layer one protocol; it might benefit other areas. I'm just simply saying the opportunity set and the size of the overall market is just another giant playing field beyond just what Bitcoin is. But look, Thomas, I'm fascinated by this. We're gonna have to jump here because we're hitting on time. But I think my quest since inception of ARCA and since getting into blockchain was always just to have these intellectual conversations, to think about valuations, to think about the properties that make these valuable. Nothing makes me more crazy than when people just dismiss the space and say it's not valuable or it has no value. Like, it's just that's been wrong for decades, or for a decade, and will continue to be wrong for decades in the future. But how we actually come up with the values is where the interesting stories come, because we all think about this space differently. And I love this. I welcome anybody else who ever has thoughts on crypto valuations to contact us and come on the show. But for now, Thomas, where can people learn more about you? Where can they learn more about Relai? Where can they buy your book? what do you want to leave people here with as we move forward?
Yeah, people can follow me and all of Relai leaders and the company on X, on LinkedIn, and on many other social media. My book is available on all major bookstores. Just type my name, you will find it. It was published by Springer Nature in summer 2023. But yeah, my quest here is really to not direct people to specifically one platform or to my book in particular. I mean, there are plenty of great resources online on Bitcoin, on crypto assets. There are plenty of places where you can purchase them in a safe way, in self-custody. I just want people to do this first step. Learn about it, make your own mind about it. Stay open-minded, and and then purchase some. Getting from 0 to 1 is the most difficult step, and then you will see your wealth grow over time, and that will do the rest.
Great. Well, Thomas, thank you for joining us. And that's it for this week on That's Our Two Satoshis. We'll be back again next week, probably with another guest. I appreciate everyone viewing, and we'll see you next week. Thanks, everybody. Thank you, Thomas.
Thank you for having me.